Welcome, everybody, to another episode of 10,000 Roads to Financial Independence. Today, we have our guest, Brent Kesler. Brent is a chiropractor and chiropractic coach for over 14 years. After implementing the Money Multiplier Method, Brent paid off almost $1 million in third-party debt in 39 months. In fact, Brent became so passionate about how powerful this concept was, he began to share it with others. It was when his previous mentor told him that he had successfully referred over 41 new clients into the system that Brent took his advice and started the journey to become a teacher of TMM method. Brent's main goal in making this move was simply to help more people understanding how to manage and grow their wealth. For the last 9+ years, Brent has been lecturing to thousands of people around the country in the dynamics of the TMM method and helping individuals break the bounds of financial slavery they don't even realize they're in. He teaches how to take back control of your financial life, which all of us need to. And Brent has a passionate belief that whether you make $10 an hour or $10,000 an hour, you should know TMM method and has this powerful information to keep control of your own money. Really welcome you to our show today, Brent.
Thank you, Elisa. Excited to be here to share with the listeners.
Yeah, awesome. So, Brent, we're going to dive into a little bit about the Money Multiplier TMM method later on today, what it is about. But first, we want to kind of understanding a little bit about your journey to become an entrepreneur who you are today. So we always ask our, interviewer person to tell us about who in your life has become influential to help you grow to be an entrepreneur that you are today.
Yeah, no, actually great. And again, so there's a couple different people in there that I'll mention and I'll throw out. So, I grew up in not a very, I grew up with a family, very loving, very caring, but not very wealthy. Not a lot of, not a lot of money at all in my family. But my dad, he was a hard worker. He was in sales. He had a vacuum cleaner store. He used to sell like water treatment systems. So I remember, even growing up as a kid, we had a choice. We either had to have so the store, that we had where we sold vacuum cleaners, the vacuum cleaner store, or an apartment. We could, all right. So anyway, we didn't have the money to pay rent for both. So we had the vacuum cleaner store, and we actually slept in the back of that vacuum cleaner store. We took showers at the YMCA, so because that was the place where we made our living, where my family, was able to survive. So you couldn't do both. So you had to do one or the other. And obviously you're going to take the one that's going to make you the money. But I learned a lot of the grind and the hustle, from my dad. That I will tell you this, he wasn't financially savvy at all. He's the type of guy that would buy something for $10 and sell it for $5. He's the guy that would buy high and sell low.
Yeah.
So I didn't learn that part from him, but I learned the hustle and the hard work and the dedication and the grind from him. Then after getting into chiropractic school, I had a chiropractic coach and a chiropractic mentor. His name is Dr. Eric, actually from Switzerland, and he was living out in Temecula, California, had practices out there, but he kind of taught me, the side of things with the business and how to be more savvy with my money. So yeah, there's been a few people, as just my life has progressed, that is kind of, I've learned from, but I think we learn from everybody, even people that we just watch and seeing what they do or what they don't do. I really, so like the late Zig Ziglar, I love his quote and what the late Zig Ziglar said. He said, if you help enough other people get what they want, you end up getting what you want, right? So I've always been about the mindset of trying to give and to serve others. I mean, yeah, don't get me wrong. I do the stuff that I do because I get paid for it, but I know if I help more people, I get more of what I want, So you got to help other people. You got to be able to help them to succeed. And when you do that, the more right? The more that you throw out there into the universe, the more that comes back to you. You might have heard of a book called The Secret before, so
Mhm.
I'm kind of a believer of that and how all that, shakes down. But I would say the top two people would be my father and also my chiropractic coach and mentor when I was in the chiropractic field, Dr. Eric.
Yeah, that's awesome. And so in your bio, I'm just gonna kind of dive into really deep over here and ask the question. You mentioned that you have paid off almost $1 million in debt in 39 months. Would you kind of share us
Sure.
a little bit of the story on that? Like, how did you end up with all these debt, and then what did you do to kind of pay that off?
Yeah, no, absolutely. Well, actually, I went to chiropractic school, and just going to chiropractic school is expensive in itself, and obtaining student loans. And then when you get out of chiropractic school, just because you graduate and you have the degree, you're a doctor, that doesn't mean anything. That and $5 will get you a cup of coffee at Starbucks, right? I mean, it means nothing to be a doctor. You put that up on all right. So, like a lot of people think, when they come out of school and they're a doctor, they put that up on their shingle in their office building, and patients just start running in. Well, that's not what happens at all. You have to get the business started. So not only do you spend the time, money, and energy school, which I went through, and I obtained student loan debt. Now I get out of school, and as I'm getting out of school, I'm kind of older when I do it, so I have a family, I have a wife, and I have a couple kids,
Yeah,
coming out of chiropractic school already. So I had to have a house, right. So that took some debt as well, some expense, and then I had to start my chiropractic clinic. So right, so I had some expense there. So and of course, I think sometimes your ego is a little bit bigger when you come out of school and you think you're a doctor. So you can think you can go out and start buying, these stuffs that doctors should have. Like I
right.
remember I had the house that I lived in, I had my chiropractic student loans, that I had my chiropractic practice. Um, I also was in the Kansas City area. So not too far was the Lake of the Ozarks,
Yeah.
between St. Louis and Kansas City. And of course, I had to have a lake house, right? Because that's what doctors do. They have lake houses. Yeah. So having a lake house, I had to have a boat and a wave runner too. Well, I'm also an airplane pilot. So as an airplane pilot, I don't want to rent someone else's plane. I want my own plane. So I bought my own airplane. So
Yeah.
it didn't take me a lot to become almost $1 million in debt. So I found myself, there kind of struggling. I mean, I was doing okay in practice. I was making money, but I was doing all the work, and all these other people were getting all the money, right? So
Right.
I was kind of like a slave in the financial world to the other people. See, I would do the work, and guess who would get the money? The student loan people, the house people, the
Mhm.
chiropractic office people, the airplane people, the boat, the wave runner, the condo people. I was doing all the work, but I was paying them all the money, right? So I
Right.
was kind of in what we would call financial bondage. So I knew that I had to do something different. I had to break those bonds of financial slavery that I didn't even realize that I was in, and start taking control of my own life. So I
Yeah.
was at a chiropractic conference one time, and I heard this information called the infinite banking concept. And a guy talked about it, and he had this book there. It's called Becoming Your Own Banker by a guy named R. Nelson Nash. And he talked about this banking concept, and it sounded really, really good. I mean, it was like, man, that sounds really good. However, it sounded too good to be true. And I'm sure,
Right.
Elisa, you've heard things like that where you hear certain things and it sounds good, but it just sounds too good to be true. Well, that's where I was at. So I left that chiropractic conference back in 2006 when I first heard that information. And I went home and I did nothing. I did nothing at all because I thought it was too good to be true. So I went back to my normal chiropractic life. And then probably about a year and a half, almost 2 years later, I go back to another chiropractic conference.
Yeah.
And about 10 or 12 of my colleagues that were at the previous conference were at this one with me. The only difference between them and me is they took action and they started implementing this process. And
Yeah.
they were just coming up to me. They were throwing up all over me, going on and on about this banking concept, how they were paying off their debt, building their wealth, recapturing, recycling their money, totally keeping control. And they were doing all of these things without working any harder, without changing their cash flow, without taking any additional risk or losing control of their money. All they were doing was one simple step they were adding in their financial life. So I thought there's got to be something to this. There's no way
Yeah.
that 10 or 12 of my colleagues, my closest colleagues, are lying to me. Maybe one or two, but not 10 or 12. So I went home and I told my wife, I said, honey, I said, we have to start implementing this into our financial life. And at that time, it was February of 2008. So a little over 13 years ago, I sat there owing $984,711 in third-party debt. Now, how was I in that debt? All the things I just mentioned: my house, my chiropractic clinic, student loans, the lake, the airplane, the boats, the wave runners, right? Almost $1 million in debt. And I added this one concept to my life, and I was able to pay that debt off in 39 months, 3 years and 3 months, without working harder, changing cash flow, taking any additional risk, or losing control, simply by adding one simple step. So that totally changed my financial life.
That's awesome. That's awesome. And then we obviously often heard about like the infinite banking, and which, by the way, if guys, if you don't have one of these books by Nelson Nash, you should definitely kind of get it. It's definitely a very interesting book in terms of understanding that whole concept. Because when I first got introduced to it too, I'm like, there's got to be something else to it. What is it? What is it? And I think it takes a couple of sessions to kind of really understanding how things are getting structured through whole life insurance, that type of investment. So Brent, can you tell me a little bit more about creating the Money Multiplier? You guys have a podcast, you have books, you have blogs, you have pretty much everything there is to get content
exactly.
on. Tell me a little bit more about, you took the step, and so that the stuff is obviously working. And then how do you kind of step by step kind of build up the money multiplier?
Absolutely. Would love to. So again, as I said, I became a customer of this concept in 2008, and I saw what it was doing in my own life. Well, at the time, I was coaching other chiropractors. So my mentor in chiropractic, Dr. Eric Breitenmoser, he's the one that taught me things in the chiropractic land, right, in the chiropractic atmosphere. And then he had a program. It was called Practice Wealth, where he was teaching chiropractors not how to treat patients, but basically the sales and the marketing aspect of the business. Well, I had clinics. I had 5 clinics in the Kansas City area. I sold my last one in 2017. But anyway, I was the thing I was doing is that I was implementing his procedures in the chiropractic aspect of things. Nothing to do with infinite banking whatsoever, but just on the chiropractic aspect. Well, I became a coach for some of his members because he had all of these members that wanted to learn how to operate in that marketing system of the chiropractic field. And he had all these clients, and he had too many clients that he could handle by himself. There's only so much time in a day, and you can't talk to everybody. So he had different levels of membership. He had platinum members, he had diamond members, and he had gold members, right? Well, the platinum members were his top clients, and I was a platinum member of his. And so he was my personal coach. Well, the diamond members would get coaching from one of his platinum members, and I was one of those coaches. So when I would speak to people about chiropractic and about their business and what to do to help increase their business, and I would have these monthly calls, or sometimes more than monthly calls with these people, I had to tell them what I was doing in my own life with this banking concept, right? I mean, even if it's completely separate from chiropractic. So I started telling other people about this banking concept, about what I was doing with my money. And the guy that I started my first policy with, actually, he came to me one day. Well, actually, I went to his office and I wanted to ask him some questions about my banking concept and my policies. And anyway, his name is Ray. And Ray came to me and said, Brent, he says, I was looking through my records and I've seen here you referred me 41 clients. And I
Right.
kind of laughed and smiled. And I said, well, Ray, you've never paid me a dime for any of those, right?
Right.
And I was, kind of joking. He said, no, no, no. He said, in all seriousness, he says, you're very good at this. He says, you teach other people how to do this. You should consider doing this yourself. And I
Right.
said, really? I can do it? He said, yeah. I said, what do I got to do? He says, well, go get licensed and so you can do it. So that's what I did. I went out and I got licensed and anyway, I was telling other people about it anyway, but now I'm telling them about it and I'm getting paid to tell
Right.
them about it, right?
Right.
So I became so passionate about this and I was just telling people about it all the time because what it was doing in my life. And I finally, I told my wife one day, I said, honey, I said, look, I love being a chiropractor and everything.
Mhm.
Um, it's all good, but I really love this banking concept. My passion is teaching this.
Yeah.
And so I stopped seeing patients. I had associate docs, right? So, like in my office, I actually stopped seeing patients before I started teaching the banking concept because I had more than one clinic. And I just started doing this a little by little. And I was telling everybody else about this. So now, really, all I do is I do the same thing that I was doing way back then.
Right.
But this is what I do full time. This is what I eat, live, and breathe. Is I teach people how to build wealth through their own debts and expenses that they already have. So I teach them the same method, the same concept that Nelson Nash in that book, Becoming Your Own Banker, taught us. Now, the book that he wrote, which I
Right.
think everybody should add this book to their financial wealth building library, called Becoming Your Own Banker. That book was actually written in 2000. So
Mhm.
it was over 20 years ago that book was written. Well, what we know now about the banking concept is like putting a turbocharger on it. So
Mhm.
anyway, that's what I decided to do is I just decided, hey, I'm going to do this full time. And so since March of 2012, this is what I do. This is what I eat, live, and breathe and do. I mean, every day of the week. And here we go. Fast forward, I'm like 9 years into this. I have over 3,400 of my own clients in every single state of the country. Everything I do now is word of mouth and referral. I don't do any marketing. I don't do any advertising. You might see, I mean, the way people come to me is generally through my existing clients or events like this podcast that I'm doing, or I speak at live events, virtual events, or I also have a recorded presentation out there on my website. And my website, it's really easy. It's www.themoneymultiplier.com. So themoneymultiplier.com. About a year ago, probably a year and 2 months ago, I wrote this book called Mapping Out the Millionaire Mystery. And I actually wrote this book with a colleague of mine, Chris Noggle. Now, Chris Noggle was a client of mine long before he became my colleague. He
Yeah.
was actually, Chris actually spent about 14 years as a financial advisor with New York Life. He's very active in the real estate industry. So if you've heard his name before, he's had a couple shows on TV with real estate, House Hunters, his most recent show called HGTV, or I'm sorry, on HGTV called Risky Builders.
Mm.
So it was Chris's idea to write this book, right? So we
Yeah.
wrote this book, Mapping Out the Millionaire Mystery. And so the thing I'd like to do before we end today, Elisa, is any of your listeners, all you got to do is email me. And again, so my email is easy. My first name, Brent, Brent, Brent at themoneymultiplier.com. So all you do is you send me an email and I'll send you the ebook.
That's
I'll
awesome. Thank
email
you.
you
Yeah.
the ebook to all of your listeners. If a person wants a hard copy, which I don't think you need a hard copy, but
Mhm.
if you do and you're in the United States, all you do is pay for shipping. I think it's like $2.90, and I'll email you the hard copy. I'm sorry, I'll mail you the hard copy, but I'll email you the
The soft
ebook as
copy.
well.
Yeah.
So
So we'll definitely put that in the show notes over here as well as
yeah.
Brent's like a website and etc. Brent, can you give us kind of like a quick highlight in terms of the TMM method? Because you talked about the TMM method and then the infinite banking. Some of our listeners are familiar with the concept, but some a lot are not. In terms of infant banking, can you just kind of give us a summary on how that using whole life insurance potentially can help you in terms of growing your wealth tax free? And also, your TMM method. I'm very curious on that particular method as well. Yeah.
Yeah, no, absolutely. And yeah, I'll give you the high level of it, but also too, just know if you want to watch my full hour and like 40-minute presentation, all you do is go to my website, themoneymultiplier.com. Up at the top, you click on resources and click on presentation. And I have the whole entire presentation there with the downloadable attachments. And it's also broken up into 10 individual sections. But just to answer your question, let me give you the big 20,000 foot overview of it. So the concept is all driven. So the infinite banking concept is driven by actually opening up a whole life insurance policy. This is what we're going to do to build our wealth. Now, I know what a lot of listeners are thinking right now. They're thinking, what? I'm going to build wealth with a whole life policy. I know everything there is to know about whole life insurance, and I would never want to do that to build my wealth. Well, let me just tell you, you don't know everything there is to know about it, because if you did, you would implement this in your life. You see, this concept, Elisa, is not brand new. It's not something I invented. It's not something R. Nelson Nash, that wrote Becoming Your Own Banker, invented. It's been around for over 200 years. The Rockefellers, the Rothschilds, the Morgans, the Stanleys, the Barclays have all used this in their lives. It's actually how Ray Kroc funded McDonald's. It's how Walt Disney funded Disneyland. It's how Pampered Chef got started before Warren Buffett bought Pampered Chef. Even if you go look up an article, June 2014, you will see President Joe Biden in this article. And Joe Biden says, I have no stocks, bonds, or savings accounts. I store my wealth inside of these whole life policies in mutual companies. And at the time, in 2014, Joe Biden had 6 whole life insurance policies. I have 19. I buy at least one every year. My children, age 20, 21, and 32, they all have multiple policies. They all live in their own homes. They bought their own homes through this system. So this is not any life insurance that you can go down and buy from your brother-in-law that sells life insurance, right? Because everybody has a brother-in-law that sells life insurance. It's not one of those.
Right.
You just can't go to anybody and buy this type of policy. This is a specifically designed, specially engineered whole life policy in a mutual company that pays dividends. And it's designed where it has high immediate cash value. And my definition of immediate is within 30 days. So it's a specifically designed policy for this high cash value. So that is the vehicle that we're using to build the wealth. That's how we're building the wealth. And I teach the concept. Now, let's just be totally clear, because I know what people are thinking. They're thinking, okay, well, that's great, Brent. I go buy this whole life policy, but I got to pay you to teach me. No. You're never going to write me a check for a dime. You're never going to write my company, the Money Multiplier, a check for a dime. See, I design your policy the same way I design my policies. There's no secret sauce that I put on mine that I don't put on yours. And you're never going to pay me a dime or my company a dime, the Money Multiplier, to teach this method to you. See, here's how I get paid. I get paid one way only. I get paid the same way your homeowner's insurance guy gets paid or your car insurance guy gets paid. So for example, if you go to John Smith, the Allstate man, to buy car insurance, the check that you write is not to John Smith. You write that check to Allstate, and Allstate pays John Smith a commission. That's how I get paid. I get paid a commission on on the policy that you start. See, no matter who you buy the policy from, somebody is going to get a commission. But the reason you want to use me and not your brother-in-law down the street that sells life insurance is because your brother-in-law doesn't understand the infinite banking concept. They don't understand how to design the policy this way, and they don't create the tools for you that we create. So when you watch my presentation, you're going to see how you get all the money back on every car you're going to buy, drive, and own for the rest of your life. So not only do you get the car, but you get the money back. I'm also going to show you how an individual paid off $470,000 of debt in 61 months. It was going to take him 218 months to pay this off, but he did it in 61 months.
Wow.
He didn't have to work harder, change his cash flow, take any additional risk, or lose control. All he did is added one step in his financial life. So he paid off that debt in way less amount of time. And Elisa, he paid off $470,000 in third-party debt.
Wow.
And he did it with a $160,000 outside injection. Now, when you see how that works, you will see how I paid off $984,711 in 39 months.
Yeah, and then so that's really kind of really key over here, Brent, because I think oftentimes when we talk with whole life insurance or other folks who have structured infinite banking policies and etc., the question was always, okay, now I have this money, like what do I do with like investing or recycle this, like with a goal set in mind? It's kind of like what we teach too, like with a goal set in mind, like what are the additional stuff that you can take the step in compound with the whole life insurance so that it achieve your end goal. So Brent, you mentioned that you will actually show your clients and etc. like a formulations on like, hey, this is how, okay, you want to pay off your debt, like this is how you would do it. And then or hey, if you wanted to invest with real estate specifically, and this is kind of how you would be able to do it by kind of recycling the money and being your own bank, lending to yourself through the whole life insurance. That's really powerful. Because I think it's the implementation of it, because whole life insurance is just like a part of the equation of investing world, and how do you actually get additional to that. So Brent, like what do you do with, do you still only invest in whole life insurance currently? I'm guessing from all the commissions, the active income that you have, you're converting that into passive through whole life insurance. Is there additional things that you kind of do in combo of these policies to make that yield even better for you?
Yeah, so let's talk about that. A couple things that you mentioned. Now, again, the whole life insurance policy is just the vehicle that we're using. Now, hardly ever do we talk about life insurance, and hardly ever do we talk about death benefit. It's just the vehicle. If there is a better vehicle on this planet to build wealth, I want to know what it is, because I've been looking for 15 years and I haven't found it. As a matter of fact, the reason that we do this, the reason that we use whole life insurance, because I could sit here and say, okay, let's buy cell phones and that's what we'll use to build our wealth. Or let's buy pencils or pads of paper or glasses of water, you know, and so let's use that to build our wealth. No, the life insurance is just the vehicle. Now, why on earth do you think we would want to use a whole life insurance policy to build our wealth? Well, here's why. Because this is what the wealthy use. The number one purchasers of whole life insurance in the world are conventional banks. Conventional banks own more in whole life insurance than all of their land and their buildings combined. As a matter of fact, conventional banks have quadrupled the amount of whole life insurance they've purchased since 2013. Now, why on earth, Elisa, do you ever think, why on earth would conventional banks be buying so much whole life insurance? Is it because they're stupid, or they know something the rest of us don't know, right?
Right.
They know something the rest of us don't know. So all we're going to do is we're going to mimic and imitate what the wealthy do. See, the concept's been around for over 200 years. It's not on trial. It's not being tested. So we're just going to mimic what the wealthy are doing. We're not going to reinvent the wheel. We're just going to use the tools that they're using. Now, a lot of people think the whole life policy is an investment. All right. Well, and I understand why people think that, because it goes up in value. Well,
Right.
anyway, the definition of an investment is something that can go up and can go down. See, the life policy is not an investment because it can never go down in value. As a matter of fact, the insurance company is contractually obligated to keep increasing the value, not only the cash value, the loan available, but also the death benefit. It gets better with time. Today's better than yesterday, okay? And tomorrow's better than today. It's not me telling you that. It is in your policy contract. So before you ever accept, sign, pay, receive your policy, you're going to see that. You're going to see exactly what happens. So it constantly goes up. So it is the vehicle that we're going to use to make our investments. All right. So I want you to think about a couple things. It doesn't matter what you buy, okay, with money. So this is money. Now, one question that I ask people is I say, tell me, what is the definition of money? And I get all these different answers, right? Well, all money is a means of exchange. That's all it is, because that's what we do with it every day. We exchange money for products and services, food for money, money for food, car for money, money for car, house for money, money for house. That's all it is a means of exchange, right? So that's the definition of money. Now, the thing that we do, so whenever we buy anything, a house, a car, a boat, a bicycle, a cell phone, a piano, a big screen TV, a chandelier, a computer, a tank of gas, an airline ticket, a pack of chewing gum. Whenever we buy anything with money, any product or service, here's what we got to do. We've got to give that money to someone else, and in exchange, they give us the product or service. Well, what happened to the money? It's gone. They get the money, and that's what we've been doing our whole life, and that's okay. We give them the money, they give us the product or service, everybody walks away happy. But the money has left your family forever. Well, what about, Elisa, if we could add one step in our financial life? We add this stupid life insurance policy in a mutual company, and now what we do is we put money into the policy first. So I'm not changing what you're doing. I'm adding one step. So now when we go buy those things I just mentioned, not only are we giving them the money, they give us the product or service, but now we have a system, a concept, a method to get all of that money back. And that's what I show you when you watch my presentation at themoneymultiplier.com under resources and presentation. I show you not only how to get the product or service that you just bought, but I show you how to get all of the money back as well. Now, don't get hung up and think this is only for third-party debt. Let's get to the question that you asked me. You said, Brent, what do you do with your money? Well, I put money into the policy first. That's what I want. The goal is to try to get as much money into the policy first, to make that step first. It would be like you driving, right? I think you said you live in Washington, right?
Yeah.
Let's say if you drive up to Vancouver. I've been from Seattle to Vancouver before in the car. Well, so like when you get in your car in Seattle and drive to Vancouver, the destination is Vancouver. But you're going to make an extra step on the way because you're going to probably not have enough gas to get to Vancouver. So you're going to stop for gas. But again, all right, the destination didn't change. You're still going to Vancouver. You're just going to make one additional stop and stop for gas. So that's what we're doing with our money. We're going to make one additional stop. And when we get that money in the policy first, now, not only do we get the money, the product or service that we bought, but we recycle and recapture all the money. Because see, here's what's happening. Whenever you take a loan, Elisa, from the insurance company, you're not taking your money. No. You're not taking your money out of the policy. You're simply taking a loan from the general fund of the insurance company. So your money is continuing to compound and grow as if it was all in there. So even though you're using the money, it's still in there growing and compounding at that guaranteed tax-free growth rate plus dividend. Now, I can't guarantee you the insurance company will pay a dividend this year, next year, 10, 20 years from now, but every company that I use has been paying dividends for over 120 consecutive years without fail. But even if they stop paying the dividend, you still have that guaranteed growth of a minimum of 4% tax-free inside of the policy and you're using the policy.
Mhm.
One more thing, because now I'm going to answer, what do you do, Brent, with your money? Well, I put the money in the policy, and then I take this money, I buy the products and services I'm going to buy in my life anyway. I buy my cars. I do my investment. See, the investment
Right.
is okay. The life insurance policy is the process of what
Right.
I do to make the investment. I put the money in the policy. Now I go make the investment. And let me tell you what I personally invest in. I'm not going to tell you guys how to invest. A lot of you guys like investing in stocks or bonds or real estate, gold, silver, Bitcoin, cryptocurrency, antique car. You invest in whatever you want to invest in. All I'm saying is add additional one step. The thing I like to do is I like to invest in real estate. I have long-term rentals, short-term rentals, Airbnbs. I have VRBOs. I do note investing. I do hard money lending, but I have collateral. I'm just not going to loan somebody money based on their signature.
Oh yeah,
I want
absolutely.
the collateral. So for example, in my real estate investing or the loans that I do, I usually have real estate as the collateral. So let's just say you came to me, Elisa, and you said, Brent, I want to borrow some money from you to go buy this house for $100,000.
Right.
Well, I'll take a look at the deal and I'll say, okay, is that house really worth 100 grand? And we find out that it is. So what I'll do is I'll loan you 75 to 80% of that, 75 to 80 grand. I'm in first position of the mortgage, right?
Right.
So if you walk away, I'm going to do exactly what the bank would do. I'm going to foreclose on you.
Right.
I mean, I like you and everything, but if you don't make your loan payments, I'm okay with you sleeping on the street, right?
Yeah.
The same thing the bank would do. They're going to foreclose on your property. So I'm in first position. I don't like second positions. I do that with my rental properties. I just bought one a couple months ago. It's on Captiva Island, Florida. You can go look at a rental that I have. It's called CaptivaBeachSunset.com. So CaptivaBeachSunset.com. When you go to that website, you see a house with a blue roof. Well, I bought that house and I bought the lot right in front of it.
Mhm.
I paid 1.7 million for it, 1,760.
Yeah.
But I get anywhere from 250 to 300,000 a year in rental income, right?
Nice.
So it's all short-term rental. It rents for 800 to 1,200 a night, and it's rented out for 40 to 42 weeks a year. Has been for years. So
Yeah.
I just went and I bought that property. I'm not changing the marketing on that property. It's still CaptivaBeachSunset.com. I have a property manager. I mean, I got to
Yeah.
do all that stuff, but okay, the thing that I did is I took the money out of the policy to
Mhm.
buy the property. Now, did I really take the money out of the policy? No.
Right.
I put my policy up for collateral, took a loan from the general fund of the insurance company, and went and bought the house. So now not only am I getting that rental income,
Mhm.
that money, that $1.7 million never left my family. It never left my family. It's still in my account, growing and compounding as if it was all in there. So I would tell you, and again, I'll say this for the final thing, and then you ask me more questions, but I will tell you that over the 3,400 clients that I have in every state of the country, over half of them are people that are very active in real estate. I mean, they may do long-term, short-term, fix and flips, or different things like that, but tons and tons of those people are into real estate investing. And now they found out the method, the concept, the system of by adding that one additional step, and it's a total game changer in your financial life.
Yeah, absolutely, because it kind of boosts to your return so much more. And then also, again, like you said, I love the analogy of like keeping the money still in the family, and it's true because it's basically the cash policy, the money that never left the account, and you using kind of like the cash policy to use for that. That's awesome. Thank you, Brent, for kind of explaining that for us and giving an example to actually show us some of your tricks, like even using the whole life for insurance. I love like where you say this is not just an investment vehicle, it's really something as a booster for what you would eventually go into, mostly like investing, real estate investing, and all the other stuff. So once again, Brent, we're going to include your sites on our note below. Our last question to wrap up our show, this kind of is going to be unconventional. We always ask our audience who have children, what do you do for your children? You kind of allude to it a little bit more in terms of teaching them the concept of financial independence or the concept of financial literacy. So, what have you been kind of teaching them when they're little? Now, when they're older, obviously they have their own life policy as well. So, can you share some of that with us?
Yeah, absolutely. And that's a great question. I'm glad you asked that because I don't think there personally, I mean, like I talk to grandparents a lot, and I don't think there is a gift that's any better to give a grandchild than a whole life policy in a mutual company that pays dividends with high immediate cash value. And I show different examples, I mean, of on some of our advanced trainings that we do about how you use the policies to pay for a car for the child, or I mean, adult, a child, whatever, how to pay for a wedding, how to use it for a down payment on a starter house, college education, charitable giving, right? So all those things that people do with money. So I'm a firm believer that we as a society, we do not do a good job as parents and grandparents talking to our children about money. Because let's just think about this. It doesn't matter how good you're doing or how bad you're doing financially. Most families do not get together and talk about money. They don't. They just don't talk about it, right? It's a sore subject. I believe we've got to do a better job of getting around the kitchen table and talking to our family, just not our immediate family, just not like our children and our spouse, but I'm talking about grandchildren, nieces, nephews, brothers, sisters, cousins, right?
Right.
About how do we keep that money in the family? We got to talk about it because if you've ever noticed, like if you go somewhere for a holiday, Christmas, Thanksgiving, or Easter, you get together with the family. Well, most of the times, what does everybody talk about? They're gossiping about all the crap that's going on amongst the family, or they're talking about their health related conditions and what doctor they went to see, which is a bunch of crap, really. I mean, it doesn't mean anything.
Right.
We have to start talking about money with our family. And the thing we got to do is we got to look back and peel back the onion and see, okay, well, what are the wealthy doing? What are they actually doing with their money and how are they acting as families? And this is why I say the Rothschilds, the Rockefellers, the Morgans, the Stanleys, the Barclays, go do some of the research and see what they do and how they manage their money and how they keep the money in the family. So we got to start with the discussion. I had a call earlier today with a lady, and anyway, this lady, she lives in New Jersey, and she has two children. And she happened to stumble across my material because somebody told her, said, hey, you should check out this thing, called the Money Multiplier, because she has this thing called an IUL policy, which is the wrong policy. You would never want to use an IUL policy for the banking concept, but more on that later. Well, what she did is she spent a lot of time doing research on this. She did a lot of time doing research on this IUL policy, and she's discovering, she says, hey, man, the IUL is not where it's at. It's in this whole life policy if I really want to build and keep cash value. And then she went on to say that her son is about to graduate school, and he's got a finance degree. And believe it or not, he knew nothing about this banking concept, and he's about to graduate here this summer. I think he's got one semester left. He's got to go one more semester, but he's never even been taught about the banking concept. And now, her son is like, Mom, this is amazing. I've been doing this research. This is what we got to do. And I told him today on the phone, or I told the mom on the phone, and right. So he's like 21 or 22 now or something like that. And he's got this finance degree. And I just told his mom, I said, look, I would love to talk to him and I would love to show him, what he can actually do with this concept, because all that stuff that he's learning in the financial world, it's just what everybody else is doing. It's what your friends, your grandparents, your parents, your colleagues, your coworkers are doing. Well, it may not, I mean, just because someone else is doing it doesn't make it right. It's just all that they know. This is an outside of the box paradigm shift. So I'm excited for this individual, for him to see. Now, again, so he may not ever do anything with this. As a matter of fact, he had a job interview coming up with Charles Schwab.
Oh.
And I said, well, that's the worst thing you would want to do with the banking concept, because what they're teaching you at Charles Schwab is totally different than what we're teaching you here. Now, I'm not saying there's a right and a wrong, or it's either this or that. No, it can be an addition to, but he now realizes that there's something else to life about money in the financial world that he hasn't been taught. And now he's ready to get around the campfire and drink some of the Kool-Aid. I mean, if it's for him, great. If it's not, but all I do, Elisa, is I just teach people. I teach people the truth about money. And we got to start teaching our children. The younger they are, the better. Even when you don't think they're getting it, all they got to do is start hearing, little things about money or this or that. As a matter of fact, I'll just tell you real quick. So my son, he's 20 years old. He just turned 20, so like 3 weeks ago. And out of my whole family, he's the one that's least interested in this banking and the money thing.
Yeah.
And I talk to him all the time. And I never know that I'm getting through. I even tell my wife, do you think Zach is listening? Do you think he's getting anything? Well, I saw him post something on Facebook, and he's now saying, he says, so anyway, he has this asset that he wants to sell, okay? And it's about a $70,000 asset. And people are like, Zach, why are you selling that? That's your baby. Why are you selling that asset? It's not, well, yeah, I mean, it is an asset. It's a 19, is it an 84 or 94? It's a Toyota Supra. So it is a car that appreciates an asset. Have you ever seen the movie The Fast and the Furious? And Paul Walker drove that car, the Toyota Supra. Well, the car is going up in value, but now he wants to sell the car. And somebody was asking him, they said, Zach, why do you want to sell the car? And he says, well, I'm starting to realize. And he says, it's good to have this car and I get to play and all of that. He says, but I'm 20 years old now. And he says, I can either make the decision, I can play for the next 10 years and have to work for the rest of my life, or I can work for the next 10 years and then I can play for the rest of my life. And that's a quote that I've been drilling in his head for years. But every time I tell him, he just looks at me with a blank stare. He's doing something else or texting and not listening. So I was almost in tears when I saw him post that, because I'm like, all right, he gets it, because he's repeating it and telling it to someone else. So even though that you think your kids are so damn stubborn, they're not paying attention to you, you got to get with them and talk to them about money. And I'll tell you the thing that I did when my kids were younger and they didn't want to listen. I would tell them we're going to go to the store for ice cream, and I would put them in the car. And I would take him to the store to go get ice cream. And it was about a 25-minute drive to where we would go. Well, guess what we talked about the whole 25 minutes? We talked about money and wealth and keeping money in the family. Because, see, the one thing I learned is that my kids will not jump out of a moving car. So they have to listen. So sometimes you may have to put them somewhere where they can't escape you, right? And that's what I did on like more than one occasion. So even though you don't think they're listening or you don't think they care, they are picking up more than we think they are. So just keep doing it. Keep repeating it, the exposure. And we got to do it. We got to continue, and we got to talk about it more. But we have to set the example first, because a lot of times we're doing the crap that we're telling our kids not to do, you know? So, and again, Elisa, I tell people all the time, I say, you got to get the negativity out of your life. Sometimes you have to fire your friends in your life, sometimes even your own family members. Now, I know that sounds harsh, but right. So you all know of family members and friends that you have right now that are dragging you down and telling you what you can't do. right? No, no, that's not a good idea. That's a scam. You should do this and that. And normally it's your broke brother-in-law telling you this thing,
Right.
right?
That's
Is
great
telling you
track
what
record.
not to do about money and finance. So sometimes we got to get that negativity out of our life, and sometimes that requires firing our friends and our family. I'm not saying you can't go and eat Christmas dinner with your
Right.
family and be
Yeah.
nice, but when it comes time to talking about subjects and money, you may not want to talk to them.
Right, right, and just keep that distance. That's awesome. Well, thank you so much, Brent. And once again, you can find Brent's material all on the Money Multiplier, and that's the moneymultipliers.com. And we'll include that on the show notes as well. Thank you so much, Brent, for today's interview. And all of you guys should probably check out the whole life insurance, the infinite banking, specifically the infinite banking concept over there.
Yep. No, absolutely. And again, just a reminder, all you do is send me an email, Brent at themoneymultiplier.com, and I'll send you the ebook.
Awesome. We'll put that on the show notes as well. Thank you so much, Brent, for your
All right.
generosity. And we'll talk to you guys next time. Bye.
Okay. See you, everybody. Bye-bye. Thank you.